2021 was a good year for the industry on many levels. One was on actual financial performance. I think the industry returned very good performance. But more importantly, if you look at areas such as non-performing loans, a very good improvement from 14.5% NPL ratio in 2020 to about 13.1% in 2021.
The banking sector was sitting in a pretty strong way in terms of liquidity. We saw the sector being sufficiently liquid and adequately capitalized to be able to withstand the shocks that had been brought about by the COVID pandemic. Indeed, our liquidity as at 2021, the close of 2021, as an industry stood at 56.2%, compared to the previous year where we had a liquidity position of 54.5% as a banking sector, and 2019 had seen us close at 49.7% liquidity. So this gave the banks the strength to be able to cope with the pandemic, and this is much of where we saw much of the resilience coming from.
The role played by the central bank in its regulatory role really played a big role in terms of providing the banks this resilience. So we'll find that, for example, banks had built quite a bit of capacity, having buffers, especially in two areas. One is capital adequacy, and the other is liquidity. And I think those two parameters enabled the banks to weather through the storm of the COVID-19 quite effectively.
More importantly, because of their financial performance, the industry contributed close to 30% of the taxes paid in this country. So again, really supporting communities in that respect.
We still witnessed some of the remnants of the pandemic. We actually in Kenya had two waves in the Delta and Macron. But however, there was some positivity because 2021 is the year that we saw the first vaccine come to Kenya in March of 2021. And with that, we also saw an easing of some of the restrictive containment measures that had been imposed by the government just to safeguard Kenyans. So with this lifting of a lot of the restrictive measures, we saw the economy begin to open up. We saw the movement of people and goods and services into all areas of Kenya. So generally the economy began to recover, and also the worst hit segments of the economy began to recover. For the banking sector, this saw us leverage on those recovery measures and began to support the Kenyans, the enterprises, the households in this recovery through providing credit facilities.
We started a program called the Inuka program. Under the Inuka program, we have trained over 50,000 enterprises. And out of those, 90% of those are fully formalized and have had access to some kind of financial support. The industry, working together with government, they launched the SME guarantee scheme, through which the government have availed guarantees to SMEs to borrow loans, and that is continuing. And I encourage SMEs to ask their banks about this guarantee scheme. The second thing is obviously working with the central bank is to come up with the risk-based pricing to ensure that there is clarity, there is visibility of the pricing mechanism from the banks, and therefore open the market to more SMEs who don't know how they are credit scored or how they are priced when they try to borrow from banks. I would say the third one is use of data, that as we digitize more, banks are going to use data a lot more to ensure that they credit score the SMEs correctly, that they're able to provide loans and more inclusivity, if you may, extend the inclusivity to have more of these SMEs and individuals actually access loans. So there are a lot of things that the banks are doing.
The industry had been pretty innovative over the years, and we saw the significant shift to digital products and adaptive solutions, and this served the Kenyans well during the COVID pandemic. So this ensured that there was no gap in access to financial services, and we can attribute a lot of the resilience we saw in the industry to digitization of the banking sector. We also saw this resilience being spurred by the improvement in the quality of the loan book. We saw the gross loans, the NPL position declining to 13.1% in 2021, down from where we were at 14.5% in December of 2020.
Also, banks were quite innovative in terms of coming up with products, and also in terms of the customer service. Because I think one of the things that was very noticeable was the level at which banks were focused on providing customers with the service that they needed. We saw this in the customer satisfaction survey of 2021, where banks came out quite strongly in terms of their customer service standards. And of course, you cannot forget the role played by other stakeholders, especially the government, in terms of providing some fiscal stimulus to the majority of the Kenyan public, in terms of having some shillings in their pockets to enable them weather the storm of the COVID-19. Of course, we also would like to recognize the other players as well, the manufacturers, the private sector entities that came in very strongly. And it was that cross-sector collaboration that really enabled the banking sector to come out quite effectively in terms of supporting its customer base to weather the storm of COVID-19.
KBA published an accessibility report in 2020, a banking accessibility report. And under that accessibility report, we set out a number of programs and interventions aimed at making sure that banking is accessible to 100% of our people by the year 2024. Last year, 2021, I was very proud to say that we launched one of the key initiatives that we have within that program, which is the Deaf Elimu program. And the idea of the Deaf Elimu program was really to ensure that bank staff are taught how to read and understand and communicate using the Kenya Sign Language to ensure that deaf customers are able to access services from the banks.
We also focused on continuing to build capacity within Kenyans, and also banks are individually doing a lot of programs to be able to improve the capacity of various segments that they serve. And for us, we believe financial literacy is one of the things that's also going to spur financial inclusion and ensure access to financial services by a lot of the customers, and also the much needed access to financial services for people in business, women and youth, as well as increase the level of penetration of access to credit services in the country.
The banking industry also did quite a bit to focus on ensuring that financial inclusion is addressed, and not just by lip service, but actually actively doing something to ensure that those who are disadvantaged are brought into the space. So, for example, there was a clear focus on the youth. There was a clear focus on women. There was a clear focus on people living with disabilities, and in particular, people living with disabilities. The banking sector went to great lengths to ensure that they are included. So the KBA as an industry group did coordinate the actions of the banking sector. We did coordinate to come up with a roadmap towards ensuring that financial inclusion is not only something that is talked about, but actually something that is felt by the very consumers. So we have got a roadmap that is being coordinated by the KBA to ensure that banks are as responsive as possible to the needs of the people living with disabilities. And we hope that the whole industry will be aligned to the roadmap, so that by the year 2024, if not earlier, we would have virtually every person living with disability being able to access all the available products in the banking sector. It's critical because one of the things we notice is that people living with disabilities, as we innovate products, we tend to leave them behind. We innovate products in areas that even make it much more difficult for them to access those services. So innovating those products with their needs in mind is critical, and that's what the banking sector is focused on.
Well, technology continues to be a big theme in banking, and will continue to be. I mean, digitalization is here with us to stay. It helps in making life easier for customers. So one of the areas that we'll continue to see a lot of innovation is in terms of how we offer services to our customers. Making sure customers can do most banking from the comfort of their houses. So that's one area that I think we'll continue to see that. The second one, as I mentioned, is the use of data. We'll continue to see more use of data to score customers, to ensure that customers have access to facilities and they are priced correctly. So that whole inclusion process will get better as we use technology and as we use data that is available to us. I think the third one is actually more internal digitization, and that will help in creating efficiencies within the banks. As the banks become more efficient, hopefully that benefit will get passed to their customers so that we'll see pricing get better, loans get a bit cheaper because we are able to offer services at a much cheaper cost thanks to the efficiency that we create. So those are some of the areas that I see banks doing well in terms of technology. I do see, however, a lot more innovation going into what I call the new economies. Yeah, I mean, the central bank has published a report that we're all looking at about the central bank currency, digital currency. So that's an area of technology that we're going to be looking at. Obviously, in terms of payments, there's a lot of developments in that area of payments. That's an area that we are going to see a lot more innovation in. So there are quite a few areas that I think will continue to be key in terms of our development. And I would say that, banking, especially in Kenya, we were in Silicon Savannah, and we are not going to be quiet when we see a lot of innovation going on. Microsoft hiring aggressively for developers, Google hiring aggressively for developers. It means there are many opportunities, and I think banks have always been at that leading edge of technology in this country. So our view is that we'll continue to have good performance. A lot of intervention that the banks continue to do in terms of, as you asked before, in terms of offering support to SMEs, in terms of inclusivity, bringing more people to give them access to banking services. All that is going to help, have a good year for 2022. Obviously, there are a few wins that we must not ignore. For example, the election is a win that's coming. We hope it will be a strong win, but a positive one. Obviously, the Russia-Ukraine war has had very negative effects on a lot of our customers, and that continues to be a problem for customers, and we have seen that translate into high inflation for goods and services, and that's obviously a problem that we hopefully, with the actions that the Monetary Policy Committee is taking, we will address the issue of inflation. I would say that those are some of the headwinds that we see, but barring nothing major new coming up, we still see a very strong economy, a very strong performance for 2022.